Welcome back. You're watching KTN Business Today. We're coming to you live from the Central Business District here at Family Bank, its main headquarters. And today we're talking about the cost of credit in the country. And just to recap our Twitter poll question, what are some of the issues that have made you shy away from accessing credit? That is our Twitter poll question. Remember, you can engage with us on at KTN News. You can tweet me at Agina Abi. And the hashtag is cost of credit. And let me just bring in my power panel this afternoon. And indeed, quite an honor to be first time in the banking hall here in Nairobi. And many thanks, Dr. David Thuku, for being gracious enough to host us. And of course, many Kenyans want pesa pap when they come for a loan. And this is not the situation right now. We are seeing many SMEs being turned away when it comes to giving them loans. And the bankers are saying, you are too risky for us.
First, welcome, Abby, and it's a great honor to host you. Actually, I learned your first show that you are doing out in the field. And we are honored to have you here in Family Bank, and welcome. Yes, credit, first of all, is a very important piece of economic activity. Mm-hmm. You actually don't grow economies if you are not lending. So lending is part and parcel of credit is part of growth. And it is in the interest of the bankers to lend. It is in the interest of the economy to lend. And for us, as a bank and as an industry, we are actually aligned to the extent that we want SMEs to borrow. We want SMEs to borrow and repay, and everybody then does business. Mm-hmm. I think there has been a lot of debate around availability of credit.
Yes.
And availability of credit is an interesting topic because SMEs need to borrow.
Yeah.
And part of the reasons that sometimes people don't access credit so much is just lack of information around what makes you become a good credit person to be given credit to. And customer education then becomes a very important piece. And shows like this where we demystify what makes it easy for you to get credit, for me is an important step in the right direction.
All right. And just hold your thoughts there, Dr. Thuku. Let me throw it off to Jeff Njao. You deal a lot with SMEs, and what is the conversation around accessing credit, and how can things be done differently? In as much as the government has indicated that there are plans to repeal the rate cap, but as we speak right now, are SMEs accessing credit?
The fact is, first, thank you for having me, Dr. Thank you for hosting us here at the bank. Many SMEs do not access credit. First is because of the long procedures, the time it takes for a loan to be processed. And it's across the board in most of the banks. It takes a bit long. You have to have had relationship with the bank. Many SMEs have not built a consistent relationship with the bank to an extent that their books look strong enough to access credit. Those who and that's why most of the younger businesses may not be in a space where they can access credit. The older businesses over time start learning the procedures that Dr. has spoken about, start understanding what credit analysts are looking at. And that's why many small businesses do not look for cost, they look for access. While banks are talking of costs, and even the Act talks about costs, but the bigger thing that they are looking at is access and speed. And that's why mobile apps are becoming faster and more popular.
Yes.
And that's why Shylocks, though they are extremely expensive, they beat the banks on speed, but the one thing that is bad with them is cost. So many SMEs would want a situation where access is made faster, and what banks have done, including Family Bank, is now bringing the apps that can be able to quicken and hasten that process a bit more than the conventional loans.
Interesting. And the gentleman sitting on the left is heavily involved in technology and, of course, payment platforms. And Mark Mungela, talk to us about the trends you're seeing. Banks are really moving away from brick and mortar, and they're trying to ensure that they're on the digital payment platforms. And what is the narrative from your end?
If I can talk from a digital payments point of view, we spend a lot of time trying to convince businesses to adopt digital payments so that when a customer comes, they find it convenient to pay you. And for us, they're always asking, what's the benefit? What's in it for me? Because they already are served through cash as it is. And just to pick on what Daktari said, is one of the biggest benefits a business has when they adopt digital payments is that the financial institution will have better visibility into how the business is performing. And so what we've been able to drive slowly up and above you accepting the digital payment, on one side, you're making it convenient for your customers to pay, but as they pay, those transactions are becoming more visible to the bank. And so it's easy for the bank to issue loans faster, easier, and be able to make their credit scoring decisions much faster.
Let me bring it back to you, Daktari. Of course, SMEs are play a pivotal role in Kenya's economy right now. And these are the mama mbogas, the bodas, but they are not able to access credit. Talk to us about what Family Bank is doing differently in order to tap into this niche, as you also give us the general performance of your SME banking business.
Very good question. Abid, let me actually demystify this for any customer. A lender like Family Bank looks at two things when you are making a decision to lend, yes or no. Do I lend this money? You look at first the willingness of this customer to repay your money. Because remember, the money that banks have is actually not their money, it's depositors' money.
Sure.
So you look at first and foremost the willingness, and here character becomes very important. The second thing that you look at is the ability to repay. When you borrow this money, how is Abby going to pay this money? How is XYZ Enterprises going to repay this money? And this is where the volumes of transactions that you do, your nature of transactions, whether it is through the banks or through the mobile applications and all that.
Yes.
Now, these two questions then inform the bank whether it will say yes or no. Now, for banks, they process a second question. If I say yes, what's the risk profile of this and how much should I price for that risk? Because you'll appreciate some profiles are more riskier than others.
That's true. That's true.
Now, for the customer on the other end, they look at two things, just like banks. They look at two questions. Am I going to get the credit? And how fast am I going to get the credit? And second question is, at how much am I going to get that credit?
All right.
And it's important, as we are having the narrative about the cost of credit, for people just to understand where every side is coming from.
Yeah.
Now, for some customers, the main thing is access. Will I get money? And we've spoken about the mama boga, the person who is actually starting off, who has not built a huge credit profile. So when the bank is assessing the ability, may not have a lot of data to assess. But they can take a risk on them and say, okay, we'll give you the access to the credit. Note that that person doesn't quite really, the primary thing they're considering is access, because they want to jumpstart themselves. So the banker takes the profile, the decision to take a risk on the person, price for it, and then start now building a credit profile. Now for Family Bank, what have we done? Just to make sure that we ease the cost of credit, automate a lot for these people, which is where the PesaPap now lending application comes in. If you avail it to this person in a more cost-effective way, then you're able to price for them a little less, because banks have operating costs. A branch infrastructure, for example, is expensive to run.
Sure.
A mobile application is less costly to run, so you can be able to pass on the benefits to the client, which is what we have done as a bank. He said, okay, now let's avail this lending to this person on the mobile phone. It's a less expensive mode of accessing credit. And then we build the credit history of this person, and then we can be able to make more informed decisions as we go along.
Interesting. And Daktari, the missing link here is that mama mboga or that clothes vendor in Gikomba, they would really love to access credit. But at the same time, they're not empowered financially when it comes to financial literacy, perhaps, of keeping records, so that if you're assessing their risk profile, you are able to say, hey, this is not a risky guy. We can actually avail credit to them. And is the bank really investing in having this ecosystem that will create the environment for them to be able to get more business by especially working with the small businesses that have high turnovers but they cannot really access credit.
Yes, absolutely. There is an expression that knowledge is power. And a lot of these people, what they lack is the knowledge of what is available and how they can get access to that. How do we plug in as a bank? We do a lot of, as our name, we are very familiar in the way we approach business as a family bank. So we do a lot of this education to our customers and potential customers of some of the things like we are discussing today. How do I make myself attractive to a lender so that I can be able to borrow money? So those education forums we do have. We at branch level, at some at regional level, just to educate Wanjiko and the person who really needs access to credit. How do I get access to credit? Because it's in our interest that Wanjiko gets credit as a bank, as an economy. Because as I said, we grow by lending to these business entrepreneurs.
Correct. Let me throw it to Mwongela. Of course, it is one thing for SMEs to desire to access credit. It's another thing for them to also have systems in place. What has been your experience when it comes to reaching out to this segment in the society? Especially, are they receptive? Because the SMEs are making good money, but this is not sustainable in the long term. So how can we also rope them in from your end?
I think I was having this discussion with him when we started, is a lot of businesses don't think about payments immediately. The first thing when a business is thinking about, how to grow and everything, they think about customers and they think about, how can I get more customers coming my way? And what we've seen as far as adoption of technology is concerned, what technology has enabled, and if I can put it in context in Africa, is that mobile is becoming this device that I can do more with. So previously I used to, use a mobile phone for calls and SMSs. And when a customer came, I used to ask them, go to the ATM, withdraw the money and then come. The whole of that visibility of the business was nobody's, it's up to the owner to know what technology is doing. Technology is enabling me to use a mobile phone to be able to run the business so I can keep my inventory and everything that I'm doing on the phone. When I'm receiving the payment, I receive it and I get the confirmation on the phone. And therefore, we start seeing more visibility of the business, giving more benefit for the financial institution to now start looking at these businesses. So for any SME, the conversation is becoming easier and simpler, because it's not just about payments. It's your business is going to become more visible, and that means it's going to become easier for you to walk into Family Bank, show them, look, this is my shop. They will already have this visibility because these transactions and everything about your shop is happening on a digital form, and therefore it's easy for them to provide you the credit.
Interesting. And Jeff, these two gentlemen are talking big, but is it practical?
The practicality comes in 3 steps. One, if you're a new guy who's starting business, Daktari here might shy away from giving you credit directly. So use his app. When you use the app, then you start building the transactions. And it's on the phone, so it's easy for you, though you don't have the best of records. But remember, for you to grow the business properly, you'll need bigger credit. The bigger credit whose threshold is not in the app. So you use that as an entry.
All right. For
you to build the transaction base, for the bank to be able to see your history. Then after that, remember, banks operate with relationship. Banks are big on relationship. It's not in the documents, but Daktari will bear me witness. Banks want to know the person because it's very relational, it's very character-based. Start building a relationship with the bank. Then, as you've now graduated from the app to now coming over to the counter, coming to the credit office, and surely enough, over time, they'll be able to give you the loan. Remember, getting access to good credit is not a destination, it's a journey. You have to keep going, slowly by slowly, and it's possible. And as long as whatever you borrow, and this is what I always tell my clients and SMEs out there, any money you borrow has to bring in money. Don't borrow for anything that will not bring back money, because the bank will not part with their money. And remember, it's depositors' money. shareholders' money. They will not part with money for a wedding or for something that does not bring back, or for a holiday, unless unless you have another income to back it up, maybe a salary or something else. For a business loan, there has to be a direct attribution of what you spend, of what loan you get, to the money that comes back. And that's what will pay the loan.
That's what will pay the loan.
Yeah.
Dr. I'm keen to find out what's your take on the interest rates. And of course, a lot of speculation that it will be repealed. On the flip side, people are still saying banks have just been running amok in terms of supernormal profits. And from where you sit as the captain of this bank, what are some of the concerns you have about the rate cap?
Let me speak as a captain of the bank, but also as a Kenyan. Because as Kenyans, we are having a national dialogue on many issues. And the good thing nowadays is that we've got so much freedom to debate. And these narratives and debates are very important.
Yeah.
On the pricing of credit, as we said earlier, I think sometimes we argue on the topic quite emotively and not quite rationally sometimes.
Yeah. And
the reason I say this is because Kenya is a very heterogeneous society. Borrowers are very heterogeneous, and everybody has a specific need. And pricing for different people will be different at different times if we just let things just flow. I know the concern that Kenyans have is banks, as you say, run amok. But I think in the time that the interest rate capping has been in place, one benefit it has had is obviously banks have had to really review their cost structures.
Yeah.
So banks are now running more efficient structures, so they are able to price in a much more reasonable way. Remember, it's in the interest of the banks to lend for the economies to grow. And it is in the interest of the economy to have credit going. We've spoken about the many things that people have done, or banks have done, and institutions have done. And what's my take about the interest rate capping? I think being a national debate, it is a healthy thing. But by the end of the day, where this lands, there should be in a place where the economy continues to grow, credit becomes available. In fact, some of the things that, as we are talking here, I was thinking about, building a credit profile. If you think about just 4 years ago, we did a lot of our banking through ATMs.
Yep.
We went to the ATM, we took money, we went and did our transactions. We passed billions of shillings through the ATMs. Today, we just do hundreds of millions of transactions or values through the ATMs in a month. That has shifted to the mobile banking.
All right.
And this is where things are happening. This is where data is being built. So repeal the law, review the law. We would obviously want that matter to end somewhere, but in a place where the economy continues to grow, credit continues to be available to Wanjiko, and it's a win-win for everybody. At the moment, Wanjiko is possibly not getting the access. And remember, we discussed the issue of access and the cost.
All right. And gentlemen, let's pause a bit and take it back to my colleague Julie, who is still camping with us here in the bank and just having interesting conversations around loans. Julie, just carry on with the conversation on your end.
Yes, Abby, we are still quite here with Mr. Karinga, who's trying to convince me to take a loan at this particular time. He's trying to convince me to take some loan. But right about now, Mr. Maringa, let me ask you this question. You know, at this particular time where our economy is going, Kenyans can't really trust their future. They don't know what is going to happen tomorrow. We get surprised each and every day. But you see out there, there's one person who's keen on starting a business and wants to start a loan. But you see, accidents happen along the way in which they might lose their job or the business might not work. Maybe if you may give us a brief on how Family Bank handles such kind of situations and probably other banks out there. How do they go about this when someone loses a job or a business in which they'd taken a loan earlier on to start up this new thing?
Thank you very much for that very good question. One of the things that Family Bank does is to work with the customer from inception to when they succeed in the businesses that they are investing in or in the plans that they have. Just in case someone loses a job, they are able to come to us and engage us And because we listen, we're able to listen and see whether we can consider giving them something that we call a loan restructure, where we give them a reprieve and they're able to pay slightly less, or they're able to take a break and then come back and continue once their businesses resume or once they get another job. One other thing that we do is we get involved in what the customer does on a day-to-day basis, and therefore we are able to offer some form of financial information, and we're able to educate our customers on how to go about it when the sales are low, what to do, what adjustments to make, at what point do you manage your costs, at what point do you change your strategy of sales, and therefore it's a family, as we call ourselves. We work together with our customers. We help them along the way because together we want to succeed. If the customers succeed and they grow, we also grow together. Family Bank has been known for very many years to start with customers from when they are very small, as in at the micro level, and we have seen customers grow into corporate entities, and that is something we are extremely proud of. And that has been born as a result of ourselves understanding customers' businesses, getting into their space, and helping them grow as we move along together.
Right. Thank you so much, Mr. Karinga. Abby, as we are being told here is that they work with their customers from the very beginning, in that the moment they lose a job or their business are not working quite well for them, it is not like it's going to be an end road. There's hope for them to actually get more money or actually take another loan, like Mr. Karinga has just told us. Back to you, Abby.
Many thanks, Julie. Indeed, interesting conversation there around loans, as well as what happens when you lose a job and you had a loan. Well, we are just at the tail end of this conversation, and let me bring in Jeff. Looking at the current environment, of course, SMEs have been very exposed, especially when you are unable to have regular cash flows.
Yeah.
And the bank is there. Remember, yesterday we were talking about things not to do when you're managing debt.
Yes.
And the bank is knocking on your door saying, we need to auction because you've not paid, you've defaulted. And I'm sure Daktari is here and he'll also weigh in on this. But from your side of things, Jeff, how do you handle this? Especially as an SME, you have maybe staff and you've defaulted on your loan. You're being auctioned. Is it a bad thing to be auctioned, and how do you handle an auction actually?
First thing, that's unfortunately an evil that is within the financial services sector that may happen to businesses. The first thing is that don't shut down. When the credit guys call you, pick the phone. Don't make unnecessary of a crisis, as we mentioned yesterday. So go and talk to them.
All right.
There is always a renegotiation. You'll be so surprised that
But I see a lot of adverts in the papers where banks are auctioning assets from vehicles to houses.
Now, you get auctioned when the renegotiated position, you've defaulted on the renegotiated position.
Okay.
Sometimes life
happens. That's a
happens.
good point to make.
Sometimes life happens and you are not able to. First, go. Have conversations with these people because they are people, they are Kenyans, as Daktari said, just like you. So they'll be able to listen. The position that you renegotiate, however, ensure that you work on it.
All right.
That if there is a problem, go and have conversation with the bank, but also understand where they are coming from. The bank does not have its own money. The bank operates with depositors' money and shareholders' money. So also hear them out. It is quid pro quo. You have to, then when you're going to negotiate, don't go empty-handed. Always negotiate with something.
Yeah.
Don't come in and say, I will not be able to pay you and let's talk next year. Come with something on the table.
But they already have your collateral.
Yes, they have your collateral. But remember, banks are not in the business of selling collateral. It's actually expensive for them to sell your collateral.
Okay.
They have to hire a third party.
All right.
They are in the business of lending and you paying back.
Sure.
So don't get them there.
All right.
Yes.
Great. Well, Mark, I just want to give you a minute in closing remarks in relation to the broad conversation on the cost of credit in the country. What's your parting shot, really?
I think for me, I'll just close by saying I'd encourage any business to consider digital payments, because digital payments provide visibility into the business, and visibility for the business means a financial institution is able to look at your business and quickly make a decision, meaning ease of access to capital.
Yeah.
And you take the last month's words, and perhaps just give us your general outlook really for the banking sector in 2018 into 2019, and should SMEs see a new lifeline this time round if the rate cap is repealed, and what then happens?
I think, Abid, thank you very much, and Jeff has captured it very well, that banks are in the business of lending and that money getting collected. And I just want to mention three things, because the topic you raised about realization of security sometimes get very emotive. What do you do to make sure that you don't reach that stage? When your banker tells you no sometimes to a credit, it is for good reasons. A lot of times it's actually for good reasons, because as Jeff rightly said, we are not in the business of realizing security.
All right.
We are in the business of giving you money so that you can grow your business. How do you make sure that you don't get there? Again, making sure that you are borrowing for the right purpose, the right amount, and you have a right repayment plan. What's my outlook for the economy and the banking sector? I think we have a positive outlook for 2018. 2017 was definitely a difficult year with all the political stuff and all that we had last year.
Yes.
2018 is a very upbeat. There is stability in the market, and we are facing a very positive outlook. The NPLs, which was a big problem in 2017, are starting to get tamed. And basically, even as we look at even how the credit market, the outlook for that, I think it's a much positive year 2018 and beyond.
Fantastic. Great place to end the conversation. Many thanks, Secretary.
Welcome, welcome.
Well, we feel like we're part of the family. Jeff Njao, always a pleasure having you. Mark Pungela, also a pleasure having you on the program. And we've run out of time. Imagine 1 hour just ended that way. Well, just before we wrap up, let me recap our teachable question. Today we're asking you, what are some of the aspects you consider before taking a loan? And we've heard it from some of the experts here from Family Bank. And I'm seeing a tweet here from Wobenjo Ogalo saying that before you apply for a loan, you have to have a purpose, you have to know the amount required, ability to service the loan, availability of an alternative source of funding, cost, and your payment period. Another one here from Godfrey saying, for him, he'll be very keen on the interest rate. And number one, and actually that is his number one and his last point, the interest rate in the market. Well, that's why we want to bring it to a close here on the program. We've been coming to you live from Family Bank here in the Central Business District, and we've been talking about the cost of credit together with my colleague Julia Wino, and of course the team that made this production a success, led by our producer Diana Tariq. It is bye-bye from us, and have yourselves a lovely afternoon. Let's keep tweeting, let's keep engaging on social media. Remember to also catch to the Trading Bell tomorrow, where we'll be hosting the CEO for Equity Bank, Dr. James Mwangi. You don't want to miss that conversation. For now, we'll call it a wrap, and we hand you over to our Swahili team, who are coming up next with more news from across the country.